Firstly, good afternoon, everyone, and thank you for joining us in what is our sixth webinar in this series. And tonight, the topic we're covering is cash flow, investment efficiency, and your future success. Those of you that don't know me, my name is Stuart Charity. I'm the CEO of the AAAA, and I'll be joined tonight by our special keynote speaker, Duncan Boyle, who's a business improvement specialist and CEO of a company called the Automotive Wealth Creator. So welcome, Duncan, and thanks for joining us. In early March, following the outbreak of the COVID-19 pandemic in Australia, the AAAA immediately kicked off these regular webinars, in addition to a range of other support services, to assist you in making more informed decisions to help guide your business through this difficult and unprecedented time. Webinar topics to date have included workplace relations and staffing issues, access to government support programs, local area marketing techniques, and tonight we tackle the important topic of implementing processes to assist you to improve business efficiency and profitability and manage your cash flow both during and beyond this crisis. And I believe the content of tonight's webinar is really timely, given that we've just received the results of a survey we commissioned earlier this month on mechanical repair workshops right around the country to measure the impact of COVID-19 on their business. And what that showed was our industry has in fact been significantly impacted by the pandemic. In fact, over 83% of workshops surveyed had experienced a decline in revenue, and half of these had experienced a drop of over 30%. So that result puts automotive in a similar position to hospitality and general retail, which are the two worst hit small business sectors in Australia. Having said that, the results were not consistent across the country. There were state-by-state variations. For instance, Victoria was the most impacted state, with Queensland the least impacted. And regional repairers are certainly faring better than their metro-based colleagues. And whilst the impact was greater than we expected, there was also plenty of good news in the survey. Firstly, we do appear to have turned the corner in May, and customer volumes are on the increase week by week. And that's resulting in a huge amount of optimism of businesses that we've hit the bottom, and we're now heading out the other side. What was also pleasing to note was how quickly and how well our industry has adapted to the situation, including the ability to significantly reduce operating costs without the need to close their business or shed large numbers of staff. There's also been a huge amount of innovation in new services and offerings to protect staff and customers. And the other thing that came through very strongly is our sector has really leveraged the significant government financial support that's out there on offer. And in fact, in all of these measures, our industry fared better than any other comparable small business sector in the Australian economy, which I believe demonstrates the adaptability and resilience of our industry. The full results of this survey, including an update on we're going to do a second update to measure changes during May and early June. That package will be the topic of our next webinar in 2 weeks' time. And I'd really encourage you to tune into that session. It will provide you with an opportunity to benchmark your business against the industry average and also get further background and information on the measures that other workshops are implementing to reduce costs and grow their business during this time. The webinar will also include a separate session on how best to utilise the updated vehicle car park data tool that was launched by the AAAA last week. And that includes the very latest vehicle registration data from the registration authorities around Australia. And you can search via postcode, as well as for the first time, a state and national level data. So just before I hand over to Duncan tonight, I wanted to run through a few housekeeping points. Firstly, the agenda is that I'll shortly hand over to Duncan and he'll do a formal presentation for around 25 to 30 minutes in duration. We'll then finish with about a 20-minute interactive Q&A session. So we'll be finished up around about 7 o'clock. For those of you that have been on webinars previously, you'll know the drill, but we have had another fantastic response to this webinar, so we're not able to activate microphones of attendees. But we do encourage you to get involved in the Q&A session. So if you do want to ask a question of Duncan or I, you'll see at the bottom of your screen there's a Q&A button. Just type in your question and we'll do those in sequential order. And the final point I wanted to make is we will be sending a link to Duncan's PowerPoint presentation out to all attendees tomorrow, so there's no need to take notes. So without further ado, it's my great pleasure to hand over to Duncan Boyle. Duncan, over to you.
Thank you, Stuart. So thank you, everybody. Tonight's topic, we're just going to, as Stuart has said, cash flow, investment and efficiency for your future success. So I'd just like to start off by saying I'm not an accountant or a financial advisor, but I have taken great care of putting some of this information together, and it is general advice. So I do advise if anything here that you'd like to move further on, talk to your accountant and or seek professional advice. So the role of a business leader is now more like designer-in-chief rather than having all the answers. You need to ask the right questions to inspire a creative response from your team. So tonight's topics will be just obviously discussing some cash flow, investment, and future success. So don't let isolation become insulation. If you don't know what day it is, it's Blur's Day. When Monday feels like a Friday, it feels like a Wednesday. And it's probably being very similar to being in a Las Vegas casino, where there's no clocks on the wall, windows, and you can't tell night from day. And I dare say there'd be a few of us on here tonight that experienced that. But what this does do, it allows us to, the current climate gives us the opportunity to reshuffle some of the cards, and it gives us the opportunity to reallocate money and resources in our businesses to make it work better for us. Even with 2% interest loans, other government grants and help the government has given us, there's opportunities everywhere waiting for us to take advantage of. And if we don't know how to make money in times of crisis, we need to be asking the right people who do. It's probably one of the most important things you can be doing right now to get us through this current situation. So don't wait till it's too late. Start asking your people that know, your accountants and the people that are surrounding you. Go find the advisors on how to make this money during a financial crisis and then enact the strategy accordingly. So some of the data that we'll be looking at tonight, and even the spend here, is that it's returning to normal. It's just 3% below pre-crisis levels. And interesting enough, the Australian Banking Association just put out figures where it was 429,000 people with a total of $153.5 billion have deferred paying their mortgages. But the evidence is showing that their money is being spent in elsewhere, and we need to be taking an opportunity of that. So how do we do that? How do we shape our company's future? So we must have a plan. Do nothing without a plan. If we haven't got it written down, it's not going to happen. So we must have a plan. So understand where you are today versus reality versus perception. So, we are downtrending, but what I am finding is that on my travels out there, once we start having a look at the data and really analysing our businesses, we're not downtrending as bad as what we thought. So reality versus perception can be different. And it is a tough environment, but I think what we're doing, we're actually spending more time on the customers that we're dealing with, and we're not confusing activity with productivity. We're actually being more productive. So set directions and priorities. So we need to make sure that we know exactly what road we're on and what we're trying to achieve. Get everyone on the same page, your support team, your team members, your business coaches, your accountants. Everybody needs to be part of this to ensure that we're all coming through it together. And simplify decision-making process. So sometimes as business owners, we overcomplicate or we overthink strategy. We just need to be simplifying it and making life a lot easier and not over-processing it. And good leaders provide good communication. So provide communication and alignment. If we're communicating properly with our staff or correctly with our staff, everybody's aligned with what's actually happening. Everybody's aligned from our staff to our support network, our business coaches, our accountants, everyone's on the same page. So strategy is about shaping the future. And how do we do that? So I'd like you to answer these questions. Are you confident in your company's future? How do you rate your business strategy? Do you actually have a business strategy? Is your team engaged in the creation of your plan? Are you staying ahead of the competition in creating a sustainable advantage? So we need to be thinking about these things to be moving forward. If we want to be creating sustainable advantages, we need a plan. So this is something that I use regularly, the plan process. We plan, we do, we check, and we act. We plan, we do, we check, and we act. And it's a continuous flow, because all our systems and processes need to be reviewed continuously, especially in times like this. Now's the time to be doing it. Now's the time to be planning, doing, checking, and act. But we need to be accountable as well. Who does what? Who is accountable? We need to have people accountable for what we're doing. Don't put people in roles unless we understand what they're actually there to do, or they understand what they're there to do. And get back to basics. You need to get back to basics. Don't overthink it. Good leaders will question communication between the office and the workshop. How's the workshop flow going? Are we improving our productivity? What's actually happening in the business to make us more successful and increase that cash flow coming into the business? And improve overall engagement. Everybody needs to be engaged in this. That is the only way to be improving our cash flow. So if your business is dealing with a couple of cash flow challenges at the moment, it's always a good time, especially times like this, just to stand back and examine what's working and what's not working. And consider making some changes. So some of the things that we might be talking about tonight might be able to help you with this. But what I would like to highlight is that this is about the flow of money. This is about cash flow, is about the income that comes into your business. It's not about us sitting there holding, counting $100 bills. So this is about cash flow, is about flow of money through your business. So today, different work needs to get done, and work needs to get done differently. So, there's so much change, uncertainty, it's simply too hard to wrap our brains about what's going on. And what we're used to are 12 months of a year, and we've seen 12 months like we've never experienced before. And I don't think, and let's hope that we don't experience it again for a long time. So what I'm suggesting is that we actually start looking at this in different ways. So 2020 can't be reviewed as 1 year. It's not 1 year, it's 4 quarters. This needs to be approached, this needs to be your approach, that we actually look at each year as distinct seasons, making 4 years in one. So with this shift in mindset, we need to be starting each quarter as if it's the beginning of the year. So the old plan for our 12-month strategy needs to be thrown out the window, and we need to be looking at our year as quarters. If we can do that and break that down, we will get through this a lot better and come out of this a lot better than what we currently have. This is also going to allow us to engage our customers differently and think about engaging our customers differently. So don't be scared to change your plan. We have plans in place so we can actually have something set, but often plans need to be reset. Often plans need to be adjusted. So don't be scared if we have a plan, that if you're halfway through, that we actually sit there and go, right, we need to change this or step it up a little bit. By doing that, it allows us to keep an eye on our cash and fuel that drives our business. Typically, the more cash you have in the tank, the longer your business can travel for. The last thing we want to do is to be running out of fuel. So despite the importance of cash flow, businesses owners tend to focus on profits and only pay attention to cash flow and when cash flow starts becoming short. So we need to be understanding cash flow. It's not just about profits, it's about cash flow and sustaining long-term businesses. So we need to alter our mindset to change the outlook of it. Yes, profitability is the goal, and it always has been. But cash flow means that we can achieve this, so we can keep good, sustainable businesses. But how do we get cash flow into our businesses? There's 3 sources of cash flow that comes into our businesses. And cash flow, it's more than just looking at your bank statements. Cash flow is more than just looking at your bank statements at the end of the week, end of the month, and saying, I'm doing okay. So the 3 ways that we can get cash flow into our business is operations, financing, and investments. So if I ask you this question, how many of you rate your profitability from your bank account? And if you are, looking at your bank account instead of looking at your financial data, we're truly not maximising the potential of your business. And by maximising potential of your business, we can get some cash flow into your business. And if we're having cash flow issues, we need to be fixing it. So some of the things that we need to be looking at to address this is our accounts receivable, to see what's outstanding from your customers. Accounts payable, which is what you own your suppliers and your vendors and your employees. And reduce personal liabilities. We're small business owners, and a lot of us live out of our businesses, and sometimes we may buy a TV for the waiting room that might end up home, and that's all parts of running a small business. But are there things at home that we can be potentially doing right now on the short term that's going to help us get through this? It's just going to stop taking so much money out of the business. And create reserves, create what I call a new zero. So if we can start building some reserves up, and money right now is probably not flowing as freely as we would like, but if we can start putting away a little bit of money on a regular basis, weekly, monthly, what's that going to allow us to do? Is it's going to build up our cash reserves. And when times do get tough, we can actually sit here and say, well, we're pretty comfortable under the current climate. So when I say new zero, if it costs you $40,000 a month to be running your business, we need $80,000 in the bank. So that $80,000 gets drawn down on. And when we get to $50,000, I want the mindset that you've only got $10,000 left in your bank account. So that $40,000 is your new zero. And we have businesses that we're dealing with on a daily basis that are actually running better businesses today and surviving is better than what they actually were 5 years ago, because they actually have new zeros. They actually have cash reserves, and they're actually coming through this okay. So it may take time to build new zeros up, but it can be done. And if we build new zeros up, it's going to help our total operation. So where do we get our cash from? From our operational side, sales after our sales revenue and payments after our cost of goods. From taxes, interest on loans, accounts receivables, and discounts in inventory. Decrease in our inventory. So if we're sitting there with $50,000 sitting on the shelf and we're not moving these, just be conscious and be aware of what we actually have sitting on there. Do we need to be carrying as much stock? If we can reduce our stock levels down to $40,000, that's $10,000 that we don't have sitting on our shelves. And remember, income or profit, on a business statement shows so income is showing profit. But if our payments are lagging behind for suppliers and other costs of the business, this is where our business is going to start running into difficulty. So we need to make sure that our businesses is well balanced and we're not carrying too much debt with these things. So cash from investing. So by selling some assets. These may include excess or obsolete equipment, some real estate, or investment securities. So it's about investing in long-term opportunities with some of these. So we may not get the cash in today, but providing a stable asset for us, or not turning a profit directly, it's not eating into our cash flow either. And cash spent to buy equipment. Where do we go with this? There's never been a better time to be buying equipment. If we have a look at what's going on and what the government's actually offering with 150,000 instant write-off, the future's looking bright. So I'm encouraging you guys to start reviewing what kind of equipment that you need within your business. Start thinking in the next 6 to 12 months what kind of equipment you need to be replacing, because there's never been a better time to be buying it. Money's never been cheaper, and suppliers are doing some seriously good deals for us. So think about this, speak with your accountant about it, and see what opportunities you can actually make out of this at the moment. And investment in less tangible assets, such as building brand recognition or buying intellectual property. Things like your signage, things like you may be replacing your point of sale system, building apps, those websites, those kind of things. Interest rates currently are at historical lows, which creates opportunity. And opportunity helps us with our finances. Cash from financing consists of cash received from loans, drawing down credit lines, profit share on ownership in a company. So this gives us the opportunity to go out there and start refinancing some of our loans and talking to the banks about refinancing some of our loans. If we've got an opportunity to decrease our loan repayments on a monthly basis, if we can do that, that's cash that's going to stay in the bank. Another way is do we potentially, if we've got staff members there that we want to start bringing into our business, what's our exit strategy? What's your plan to get people into the business for part of your exit strategy? So part of this could be right now as a profit share and getting, you may have service advisors or managers within your business that are potentially looking at buying your business. Now might be a good time to be getting them involved. So we also need to look at our accounts payable. See what's outstanding from your customers. Accounts receivable. This is the point of influx for your company's cash flow. And it's important to stay on top of these deadlines. Regularly review what's outstanding, and be proactive to round this outstanding cash up. So we need to be more proactive about this. We can't be having money sitting out there over 30, 60, 90 days. Accounts payable, which is what you owe your vendors, suppliers, and employees. So accounts payable equates to cash leaving your business. So it must be considered as part of your cash flow as well. By understanding and using our cash flow correctly, paying it out, so we potentially could ask our vendors for extended terms, payment terms. But in saying that, just be aware and make sure you understand that there's no fees or extra invoice, extra interest or charges come with this as well. And remember, you still need to service this debt. So if you are going to be extending some of your payments, you will be needing to pay this at some stage. And monthly payments, spreading out these obligations. So if we, at the end of the month, have 10 invoices that we need to be paying, maybe we can look at spreading those out during the month. So we're not getting a big cash draw out at the end of the month. Maybe we can spread those payments out over the course of the month, and then we're reducing our ebbs and flows, our peaks and troughs. And most importantly, stop acting like a bank. You are not a bank. Have a look at your payment terms. And are we allowing our customers to pay us too long? Are we just allowing them to let them go? Some customers might be delaying using us to finance their own cash flow. So we need to be on top of that and making sure that it doesn't happen. And if I was to ask the question, how many of your customers do you have on accounts with a signed personal guarantee? So if people are actually not paying you and we can't get that, how many of them are actually have a personal signed guarantee with you to make sure that we do have checks and balances in place? And the other thing that we could be looking at too is we should be asking for deposits up front. So if we have someone that's coming in and doing an engine rebuild or gearboxes or big work, we need to be asking for deposits on this. And don't be shy to ask for progress payments. Do we potentially have them, pay 80, 90% by the time the job's finished, by the time the work's being completed and carried out? So, this may be causing cash flow squeeze that can ultimately hurt your financial health of your company. So start thinking about some of these things. And most importantly, pick up the phone. So we're sending invoices, reminders by email, electronically. There's nothing better than actually picking up the phone. If you're sending an email, it's distancing. It's putting a gap between you and I. But if you pick up the phone, you're actually creating that human touch where they remember why they've come to you. They've remembered the work that they've actually done. So if you have that human touch and pick up the phone, you've got that human face, and people will generally pay a lot quicker than what they will just receiving an email going, I'll forget about that. Pick up the phone, generally they will act on it. And something else we also need to be aware of at the moment as well is that not paying bills and staying friends. So the number of companies overdue on bills has risen by 50%. So what's the relationship going to be like after this? Is this potentially, our working relationships potentially going to be becoming another victim? So protect yourself by being proactive, picking up the phone and preserving the relationship with your suppliers and your customers. So the other thing that we need to be looking at to generate income for us is our CRM. And we need to be creating an amazing customer experience, and we need to be thinking about that differently as well. So potentially what some of the experts are saying, there may be a second wave. And society, we need to change and think about how we're going to be doing business, because business may not return to normal for quite some time, if at all. So we need to be thinking, potentially not thinking about this as a single event, but a recurring disruption. And we need to be adapting quickly to this. So potentially, what if we don't get on a plane in 2020? We don't fly anywhere again. What if we don't actually start seeing our customers? So a second wave would make this potentially real. So this is important. And our industry faces unique challenges in the modern economy. It has and it will. There's a strong competition between new and used car market out there. And a lot of the dealerships out there, as we all know, have been closing their doors or only trading 1 or 2 days a week. Their overheads have just been too massive that they've had to close. Whereas we've had the opportunity to keep trading and keeping cash flow coming through the business. And customers have an incredible information through the internet. They are subject matter experts. You just ask them; they know more than what you do. You only have to ask them and have a difficult customer, and you'll know that. So we need to be reviewing our systems, our customer calls, our follow-ups, our social media, as we spoke about 2 weeks ago, and more engagement along those lines. So building relationship requires more effort. We're going to have to be truly thinking about how we do things differently. We need to be building an advantage. So how are we standing out from the rest? How are we standing out from the guys down the road? We need a competitive advantage. We need to be a preferred supplier. And there's one universal principle that determines this, is that preferred provider to your markets. What is preferred provider? It's someone where your customers want to come to you and not go to the guy down the road. So what are you doing differently to get that customer through your door than the guy down the road? What services? What products and services of quality are we offering? Are we providing a great customer experience? Are we delighting the customer? Are we trustworthy? Are our customers seeing us trustworthy? Are we on the journey or on the path to be the best businesses, in the world? Is that the way that we should be thinking? How are we going to be engaging these customers? Programs like this allow us to engage the customers and touch our customers without physically touching them. And some interesting stats out of this is the smartphone users spend 80% of their time in apps versus 13% on websites. And 66% of 30 to 4-year-olds use apps to make appointments. And people aged 55 and above spend 2 or more hours on their phone a day. So these are the type of programs that we potentially need to be looking at to send a quote or an estimate with some animations to reinforce what we're doing. This is how and why we need to be thinking about it. We need to be leaders. And we need to be engaging leadership in a different way. So this crisis, make your organisation stand out by changing the mindset of your leaders. This crisis has allowed us to step up as leaders in organisations, and we've kind of thrown the old way of doing, the bureaucracy, and we're giving rise to better behaviours. We're actually changing how and why. So interesting stats here is that leadership, 75% of employees, report their boss is the worst and most stressful part of their job. 65% say they'd take a new boss over a pay rise. Really? That's interesting. And 60% report that their boss damages their self-esteem. So it's opportunities like this where we need to be looking at different opportunities and engaging different companies. This is not all about corporates anymore. This is not about big businesses. We need to be thinking differently down at our small businesses as well. And it's madness to repeat the same behaviours and expect different results. We need to be changing. And one thing that is changing is cash is no longer king. So interesting that it appears that cash, people are getting away from cash, and the ATM withdrawals dropped by 12% from November, with levels across all income brackets. So interesting enough, the higher income earners are the biggest adopters of buy now, pay later, with a 63% increase. Lower income earners maintain a steady threshold. So my interpretation of that is that they've always been using it, but it's the higher bracket income earners that are actually using it. So once again, these higher income earners are actually deferring payments and paying bills and borrowing money. So buy now, pay later, and I don't know how well you can actually see that slide, but it's actually up by 22%. So that's quite interesting. So we need to be looking at options within our business, and some of the options for this are getting the afterpays, hums or open pays in our businesses, where we're physically getting the work done. We're actually getting the customer to make the decision about whether they want finance or not. That's not our choice. All we're doing is giving them an opportunity to get the work done and offer them a payment plan. It's up to them whether they decide to do it or not. So we need to be doing this. So if we do this, we're not losing the work, but you're getting the money straight away. And yes, there's always a percentage or a cost of that, but it's better off than letting the job go and walking out the door. So some other things that we need to be looking at too is our productivity in our business. If we increase our productivity, it's going to be allowing us to get more work through the door. And if we get more work through the door, we're actually going to be increasing our cash flow. So don't confuse activity with productivity. So establish your systems and processes and put them up against industry standards. Gauge yourself against industry standards for productivity, efficiencies, your gross profit on parts, labour, your net profits. And have golden rules and checks and measurements in place, so all your staff know exactly what the expectation is, and coach the staff in the correct methods of actually doing it and how and why, the benefits. Make sure your organisational structure, engage a proactive approach, make sure we're having the right people in the right places, and redefine day-by-day roles and responsibilities so people actually know what's going on. So the more people know what their job role is, the better they're going to be doing it, the more productive and efficient they'll be, and the more we can look after our customers. If we get an extra 1 or 2 customers through a day, that's actually increasing our cash flow. We're actually getting some better money through the door. And make sure it's documented so they can physically see it, so they actually know what their roles and responsibilities are. And review. Make sure that we're doing reviews and they know exactly where they stand. Team engagement. Like we said, leadership is a massive part of what we need to be doing and how we need to be doing it. So re-engage with your teams, rebuilding that rapport, especially under the current climate where we've had staff that have been working 3-4 days a week, having long weekends, reduced hours. So when we re-engage our teams, we need to be really rebuilding that rapport and making sure everyone's on the same page. And implement and capture measurements of your team ideas. So these guys have some good ideas. Don't ignore them. Let's see how we can be more productive and more efficient in the workshop and or through the office. And no blame tone for all forums. We're not here to blame anybody. We're here to improve. If we can improve how and why we do business, we can definitely be improving our cash flow within the business. And once again, we need accountability for everybody. So you have the charisma, talents and skills within you to achieve great things. You just need to understand your true worth to unleash your potential. Sure, hard work, resilience, continued learning, they all play a part. But knowing these essential money and mindset traits will increase your worth. All these things are part of our businesses, our customers, our cost, our growth, our balance sheet, our productivity. But difficult roads often lead to beautiful destinations. The best is yet to come. So if we work smart, we actually start analysing our businesses, we're clever, we're implementing, getting the right people around us to support us through this, we can actually come through this better businesses than the way when we first walked into it or came into it. So in summary, plan, do, check, act, get back to basics, don't overcomplicate things. Understand where you are today versus perception. How you sometimes think your business is performing is different to actually what's happening. And set directions and priorities. Reduce your personal liabilities. Analyse return on investments. So, like we said, there's a perfect opportunity to be going out buying equipment now. Make sure you're doing a return on investment for it. Make sure that we're going to be making money. Reduce your non-profit business services. Review current borrowings and rates. Investigate some of the comparative market rates out there for some loans. Definitely go and talk to your accountant and or your bank managers about that. And review some ownership structures of both your assets and business operations. Thank you.
Thanks very much, Duncan. That's a great presentation, very thought-provoking, and yeah, I think there's some great content for everyone there. So now's the interactive part of this session. So we'd encourage you to put your questions forward. You've got Duncan here to answer them. As I said at the outset, if you just move your cursor around, you'll see a Q&A button at the bottom of your screen. Click on that and type in your question, and we'll get to it. So any questions out there for us? Just wait. There must be one question out there. Come on. I think you've bedazzled them all.
So it's thought-provoking.
That's right. Oh, hang on, here we go. Well, just while we're waiting for a couple of questions, maybe. Oh, here we go. There's one there. So this is from Paul Perrin. Apart from a business plan and a cash flow forecasting, what other ways can we plan?
I think now is a very good opportunity to be planning our business as a whole, and cash flow and forecasting definitely plays a part in that. But I think the planning of how and why we do business, our customer engagement, our CRM programs are all vital and important. The way we're engaging our teams and having everybody on board, I think, is important as well. So business plans are crucial. Business plan should be covering off, many topics, not just about cash flow, but it should be our customer engagement, our CRM, how we're managing our staff, our training of our staff, the leadership of our staff, our personal and business development as well.
No problems, thank you. From Darren Brims, so Darren, Maryborough there. What should you do with unengaged staff during these times?
Always an interesting question when it comes to staff. I truly believe we should be out there looking at staff. So there are plenty of businesses that have slowed down and or not working. I think we need to go and have a look at the talent pool out there and potentially have a look at what opportunities are there. So you might think you have a good team at the moment, but what other opportunities out there? So don't just dismiss it. To be engaging the staff under these times. Look at some leadership courses and or staff engagement. Have a look at how we're actually leading our team. Do we get some external people in to actually change their mindset? Like I said during the presentation, this is not always just about corporates and CEOs and senior managers. Times are changing, and we need to be tapping into some of these our staff as well.
Thanks for that. The leadership statistics on the slide, were they automotive specific or were they across general?
In general.
Yeah. I think I mentioned that metro and regional workshops are seeing different situations. Do we have any thoughts on how metro and regional workshops might differ their approach during these times? Look, I think generally and anecdotally we were hearing this, and it was reinforced in the survey that we did, that whilst there were state-by-state restrictions, that there seemed to be a little less tighter in regional areas. Often regional repairers also have good personal relationships with their client base and so on. So I think that goes to why there is a differential in those numbers, and we probably expected that. But Duncan, any thoughts on different approaches between regional and metro?
Look, I've been far and wide from, Albany to Darwin to Melbourne's and Sydney's and Cairns and things. And at the end of the day, we're all providing the same service at some level. And what I find is in communities more regional, it is a lot closer, a lot. You do have a better relationship because it is a small country town, and no disrespect, but they are, smaller country towns, so people engage differently. But that doesn't mean that we shouldn't all be heading down the same path. And that's, we need to be looking at apps, and we need to be engaging our customers differently when we are sending estimates through and using animations and those kind of things. So it's all pretty similar. I just think the regional's a little bit more personable because that's how country people are. But I think the principles are much the same.
Yeah, look, and I agree. I mean, business is about relationships at the end of the day. And if you've got, it doesn't matter where you're located, if you've got those strong relationships, that people are going to come back. We've done some surveying of customer insights, and people that find a good mechanic keep going back. They're rusted on. So yeah, it's building that relationship.
Definitely.
Where do you suggest we look for funding options for new equipment? Is it low interest bank loans, interest-free periods?
Everywhere. Get out there and have a look everywhere. So we've got banks that are offering seriously good interest rates. We've got companies like Repco that are doing good deals for people. We've got just everywhere. Start at your bank, but maybe go to a different bank. So just have a look at different options. Some of the government, I know here in Queensland, there's government loans that they're actually giving out, or some government grants that are actually giving out as well. So do a bit of research. Don't just go to one and say and lock that in. The world is our oyster at the moment. We just need to be doing a bit of research. Take the time to do some research because it will pay off.
Next question, you stress the importance of having a great accountant. Does he or she need to be industry specific?
Look, I don't believe so. I believe it does definitely help, and there's some seriously good accountants that work within our industry. I think of accountants as, and I hope I'm not offending anybody here, I look at it as a bookkeeper as your apprentice and your accountant as your qualified mechanic. And we still need to be instructing and or asking questions. So there will come a time a business owner outgrows their accountant. And we need to be asking the right questions. And if you feel like you're not asking them, you're not getting the right responses, maybe it is time to look on and to move on. So we're fortunate enough we've got groups like this that we can actually share data and talk and ask questions and say, my accountant's doing A or B. And if you're not getting A and B, potentially start asking around. So as long as we're asking the right questions and pushing the accountants, there will come a time that we will outgrow them. I've got a couple of good accounting firms that I recommend and suggest on my website if you are interested in looking. That's entirely up to you.
Thanks for that. What suggestions do you have for reallocating money and resources?
I'd be talking to my accountant. What suggestions do you have for reallocating money and resources? So this is why we actually need a plan. So we can just sit here and say we need to be reallocating money to A, B, and C, but we actually need to understand truly where it needs to go. So to me, this would be sitting down with your accountant and or business coach, the shareholders within that business, and having a real plan about what your business needs. So what I might do tomorrow is have a plan as part of this presentation that you can sit down and just start filling out, and then have a look at where it actually needs to go. Have a look at your resources. It's about your bigger picture. Your accountant should be looking at your business and your personal life or your personal finances. It should be looking at a holistic point of view to maximise that opportunity for you. I can't sit here and say, you know, send it here because I don't know your circumstances. So sorry, Colin.
No problems. What customer contact would you recommend during these times?
Oh, look, definitely be jumping on the phone, definitely apps, you know, some of those figures that are coming about on these apps, you know, we're getting more savvy, people are jumping on the apps, people are making bookings on the apps. So picking up the phone, some of the apps, if we're sending estimates, you know, using animations to go with that as well. Completely think about changing differently how you're engaging today to what you were yesterday.
Yeah, look, and just on that point, I mentioned that there were the results from the survey were patchy, but what is coming through very strongly is those automotive repair businesses that have been proactive in reaching out to their customers are the ones that are really have recovered the quickest, because there was a lot of confusion, particularly early on, about what people couldn't do. Businesses were open, but people either didn't know they were open or didn't think they could go and get their car serviced at this time. So that proactivity and reaching out to your customers and doing it in an objective way, and talking about the business changes that you've made to reassure people that might be concerned about infections and so on. So those are the businesses that have really thrived during this time. And
yeah, definitely. Yeah.
In your opinion, what's the most effective marketing strategy to increase business without reducing your prices?
Don't reduce your prices. We should not be discounting. If there's one message you can take away from this today, Lauren, is we don't need to be discounting. If we're stepping up and engaging our customers in different ways, if we're engaging them, truly giving them a return on investment, so that explanation to the customer why they're coming to you, you know, the quality parts you're using, the technical training that you have your staff, the equipment, the tooling, there's no need to be discounting. They'll get frustrated that we discount it as an industry. We don't need to. Stop bastardising the industry. Stop cutthroating one another. You don't see a dentist or a doctor do it. Why do we do it? Stick true to your pricing. Don't undervalue and don't underestimate what you do. As far as a marketing strategy goes, bit of a loaded question, open question under the circumstance about really knowing your business. I'd be, you know, potentially having a look at your market, and the one that you were talking about, Stuart, before with the AAA and the car park information. Jump onto that. That's always been a good tool. I've actually used that a few times myself. That's always been a good tool to understand your demographics, understand your car park, understand makes and models of your cars, and then potentially get out there and start marketing to that. Obviously, we did a marketing one 2 weeks ago. I know that's still online on YouTube, so maybe you can tap into that and have a look at that.
Yeah, and I'd just echo your comments about discounting. I think that our industry, if it's got one fault, it is that people are very quick to try and discount and undercut and what have you. And it's a race to the bottom. We don't need to do that. Your customers, if you're doing the right thing by them, they're going to value your service. And I think price came in number 6 or 7 in terms of drivers of customer satisfaction. It's not why customers come to independent repairers. It's about trusting that you're going to do the right thing, give them good advice, not rip them off. But
absolutely,
they're prepared to pay for that.
Don't rape and pillage. Charge a fair rate for what we do, and don't undervalue what you do. If you want to go broke, go and sit down at the beach drinking pina coladas and at least enjoy yourself going broke. So we don't need a discount.
Jeffrey Peake has asked, retail is quite buoyant at the moment. Do you see that continuing into the future?
Potentially. I think for the last few years, with the norms of Christmas, Easter, school holidays rush, is kind of, we can't predict that anymore. Yeah. Look. Who knows? I think right now we have 3 or 4 days that we're booked out, and then we're quiet for a day or two. I would like to think once all this is settled a little bit, I personally think people will start getting out a lot more. As we said a couple of weeks ago on here, with fuel prices, airlines being impacted, are people going to be taking more road holidays? So potentially we will be seeing more customers through. Bit of a hard one.
Yeah, look, and retail, as your figures showed, really has bounced back. Having said that, there's a lot of cash out there swirling around from stimulus payments, whether that be JobKeeper or payments directly to businesses. There is some concerns that all of that kind of is going to end in September, and we may be headed for a bit of a second wave of economic activity. But I think the government's also got a bit more money in their kitty after the accounting errors with the JobKeeper payment, and I think they're looking at sector by sector support to try and make sure that there's a bit of a soft landing. But the government has said that it's going to be much harder to come out of this situation than go into it. So, whilst we are cautiously optimistic, I certainly don't think we're definitely out of the woods yet. But retail spending is holding up, which is great. A couple of other questions just before we wrap up. So, besides employment contracts, do you have any ideas on how to make staff accountable?
We need to make sure the staff understand what their roles are first, and in my experience, we put people in jobs without or positions within the business without actually fully underlining what they should be doing. So we need to be communicating and showing some true leadership as business owners. To make a staff accountable, they need to know exactly what their day-to-day role is. They need to know what that role entails, and they need some KPIs in place. They need to understand that this is the expectation. So I have an expectation that you will be doing A, or you'll be doing B. I have an expectation that you'll be doing estimates within by 11, 12 o'clock in the morning, so we can get that work done. We've got to be clear and succinct in that message we're trying to get across. So, sit down and talk with them, make sure that they understand week by week, month by month, that these are the KPIs and they aren't meeting them. And if they aren't meeting them, are they the right person to have in your business?
Excellent. This is probably one for me, or it is one for me. So what are the three priorities that the AAAA are working on at the moment, or the top three priorities? And where do we see the industry headed in 6 to 12 months? I've got to say, like every business, all the priorities that we're working on got turned on their head a couple of months ago, and our priority at the moment is trying to get information and support services out to help businesses through this. But I'll talk about the three priorities, I guess, that are overarching for really to support the independent repair and service sector. The first one is mandatory data sharing, and the good news is that whilst things have slowed down a bit because government has other focuses, it's still a major priority of government. And in fact, we're working on writing the legislation as we speak. So we need to get that in to underpin your ability to be able to access the repair and service information that you need to repair vehicles. The second one is really about taking the fight up to the OEMs and dealers around confusion about warranties. We need to start really punching some holes in cap price service programs and other offerings that OEMs, because often they're not they're too good to be true, and often they turn out not to be. So I think we have to, as an industry, really take on the car companies. And the third one is skills shortages and skills gaps. So vehicle technology is really creating the need for ongoing training and upskilling of existing technicians to make sure that you're across new technology, but also we've got a real problem about good young people coming into our industry, and we need to address that. In the short term, what we're seeing actually is a whole lot of technicians and apprentices being let go by dealerships, and so there's a good opportunity to get out there and recruit some really quality technicians and apprentices. But we do need to address that issue in the longer term. In terms of where we see the industry headed into the next 6 to 12 months, look, it's difficult to anticipate much at the moment because there's so much uncertainty. But I got to say, we're pretty optimistic about the next 6 to 12 months. All the normal indicators that I guess drive demand for automotive repair and service are lining up really well. We've had very slow new car sales. People are holding on to their older cars, which is good for us. I think in the short term, we're going to see more people using private cars rather than public transport. I mean, petrol prices are low. People need to get their car serviced. You can only put that off for so long. So there's a lot of things lining up, and quite frankly, the dealership sector are in a world of pain at the moment, and there'll be quite a few dealers that may not come out the other side of this. So I think there'll be less competition from that perspective. So I do think that we're in a good position, and historically our industry has bounced back very quickly and very strongly from economic shocks. So look, hang in there. It is difficult at the moment, but we see some good light at the end of the tunnel. We've got one more question from Sandra Bruno. What are your thoughts on loan payments deferred initially, but I've been asking to reinstate? Do you think I'm going too early?
Your accountant is probably the best one to answer this for you, Sandra. But we just need to remember that anything we've deferred, we need to be paying, and anything that has interest is going to be accumulating. So the banks and or providers of finance will be getting their money back at some stage. Don't worry about that. So if you're in a position to your business is strong, you've got some good cash flow coming through your business, or has been in your business since this situation started, maybe start doing some part payments back to reinstate. So maybe you don't have to go the full amount, but maybe you can start making smaller payments initially, keeping some of that cash flow in there. But just be aware, the longer we defer, the more that we need to be paying back. So if you can manage to pay it and it's business as usual, absolutely go ahead. If you're still a little bit dubious about, I'm not entirely sure, maybe just make some part payments and start slowly building that implementation back up.
No problems at all. Well, thanks for that. I'm conscious that we're just about to tick over to 7 o'clock. Thanks for those people that have been putting positive messages through about the quality of the seminar and the support they're getting from the AAAA and you tonight, Duncan. So we really do appreciate that. So just a couple of closing remarks. Whilst things are still difficult out there, there's no doubt about that. But as I say, we are starting to see a little bit of light at the end of the tunnel, and we really hope that things continue to go in a linear fashion and from an improvement point of view. Certainly, governments are starting to remove restrictions, which is freeing up people movement, and certainly based on traffic jams around Melbourne and other major capitals, traffic volumes are starting to get back to normal, which is all good for us as well. So just to reiterate, I think the theme for tonight is that our really strong advice is don't take a pessimistic approach to what's going on at the moment. Really use this time to implement changes in your business that will not only help you get through the next few months, but also help you come out the other side far stronger and far more profitable. And the final point to make here is that there's a huge amount of support and expertise out there to assist you to do that. There's people like Duncan and other business mentors. There's the services and support that the AAAA is offering you, there's a whole lot of resource out there and people that can really provide you with simple strategies you can implement into your business relatively easily that really will yield enormous benefits for you moving forward. So on that note, I really wanted to thank Duncan for giving up his time and expertise tonight. And certainly I'm confident that everybody that was on the webinar tonight's got some valuable information and ideas from your presentation. As I said earlier, Duncan's slide pack will be made available to you, and it includes some contact details at the end, as you saw there. And I know Duncan is happy for anyone that's got follow-up questions to make contact with him, and he'd welcome your call. So just in closing, yeah, no problems. But just in closing, I wanted to thank everyone out there for your participation in this webinar tonight, and your ongoing support of the AAAA. Our team really are working hard and are committed to doing everything we can to support you and help guide you through this difficult time. And if you haven't already done so, we would encourage you to visit our website, AAAA.com.au. We've got a special section on COVID-19, all the support resources and information there. So we'll close off tonight. Thanks again, Duncan. Really appreciated your time and expertise, and thank you all again for your support and being online. So thanks, and we'll see you for another webinar in 2 weeks' time. Thank you and good night.
Thank you, everybody.